Hi friends, welcome to A2E Academy. Okay, A2E Academy has different dimensions. What is A2E? Let's now look at the different dimensions of A2E. Okay, A2E has one A and two E's, right? A2E. It stands for Accounting, English, and Excel. A2E helps you to excel in your profession through the proper use of English and Excel. It's a transformation from A to E. See, now look at the different dimension of A to E. A to E, accountant to excellent accountant. That's how we have defined A to E. And at the third dimension of A to E is A to E Academy brings you the A to E, that is the basics, A, B, C, D, E, right? That's the basics of accounting, English, and Excel. We will focus on basics and intermediary concepts of these three topics. Look at guys, look at here. Accounting is one of the best professions in India and around the world. You can excel in this field if you have a good command over English and Excel. One of the major problems with accountants here in India is they do not use the proper English. There would be sometimes, for some people, not all, some of them have grammatical mistakes in their communication. Uh, English is one of the uh, important problems for them. Okay, they are very good in accounts, but they are not so good in English. So we are going to focus on grammar, we are going to focus on communication, we are going to focus on good proper use of English, and also Excel is some Excel MS Excel is something which is very important in day-to-day life, right, in offices, because we can do almost complete accounting in Excel itself. We can prepare balance sheets, we can prepare all the financial statements, we can make journals, and we can post the journals on other ERP platforms. So A2E Academy makes learning very simple with simple examples. So guys, please prescribe to our channel. Uh, and there's a promise from us. First 1,000 subscribers are going to get free learning materials from A2E. Thanks. Now, without wasting much time, we will quickly jump into the topic of the day. Today's topic is account basics of accounting. Okay, what is accounting? As I was telling, we are going to focus on basics and intermediary concepts. Okay, basics of accounting. So, what is accounting? So, the question is, what is accounting? So, for freshers and for those students who have started learning accounting, the first question is, what is accounting, right? Let's look at the spelling Accounting, right? I'll just give a space in between uh, AC and counting. What it becomes AC counting, right? What does that mean? Is it counting number of air conditioners? Yes, it spells the same, but it's as easier as that. It is not counting of aces, but it's as easier as that if you know some fundamentals. So you should know the basic fundamentals of accounting. Once you are aware of these fundamentals, it's as easy as counting anything. So what is accounting? Accounting is the process of recording, summarizing, analyzing, and reporting of financial transactions. Please look at the definition and you might note down this definition and keenly observe each word here. Recording of transactions. Summarizing. After recording, you need to summarize the transactions, and then analyzing. Okay, analysis, we call it state analyzing the statements, financial statements, and reporting of financial transactions. What is reporting? You come up with various reports like income statement, balance sheets, cash flow statements, and others. These three are major statements. So accounting is the process of recording, summarizing, analyzing, and reporting of financial transactions. Now, I was just talking about fundamentals of accounting, right? What are the fundamentals of accounting? Debits, credits, elements of accounting, and golden rules. Golden rules of accounting is most important thing, guys. If you know the golden rules, you can just follow the rules blindly. You will end up doing excellent accounting without your knowledge. So for freshers, just hold on to it. Just let us not look at debits and credits or elements right now. Right now, let us just look into the golden rules of accounting. Okay, the golden rules of accounting. There are three golden rules of accounting. Okay, the first one is debit the receiver, credit the giver. This pertains to personal accounts. Second one is debit what comes in, credit what goes out. This pertains to real accounts. Last one is debit all expenses and losses, credit all incomes and gains. This pertains to nominal accounts. Okay, there are three kinds of accounts: personal accounts, real accounts, and nominal accounts. Personal accounts deal with individuals, persons who have names. Real accounts deal with something you can touch, you can feel, right? Like fixed assets, like your vehicles, TV, fan, fridge, whatever, laptop, whatnot. Anything that you can touch and feel. And nominal accounts are those accounts that have that you cannot touch and feel, but these exist in the accounts. Okay, we'll discuss those in later with examples so that you will understand later. And most important here is never use negative amounts in your journals. Okay, if you need to reverse, just reverse the entry if you don't want it. Like if you have entered something, some journal, and you realize later that it's a mistake, don't use negative amount there, just reverse it. Okay, the account which you have debited, that you can credit it. Account you have credited, you can debit it. That way you can reverse the journal instead of using negative amounts. So do not use negative amounts in the journals. So now look at how to do the journals. What are debits and credits and a double entry accounting? Now let's look at those topics. Okay. In double entry accounting, there are two effects of any single transaction. Okay, there are two effects. Example: Kiran buys a laptop for rupees 40,000 by cash. Okay, so what are the two effects? Kiran is now the owner of the laptop. He gets the ownership of laptop. So first effect is he got laptop. Second effect is he lost cash. He has given the cash. So cash has gone out and laptop has come in. These are the two effects. So this way in double entry system there are definitely two effects of any transaction. Okay. So something came in and something else went off, right? That these are the two effects of this transaction. Let us now look at debits and credits. What is debit and what is credit? So in accounting, guys, so we need to, as I said, there are two effects. So these two effects need to be documented, needs to be journalized. So that we are going to create this journal. This is a journal, and we are journalizing it, and the journal is just a record of transactions, and any journal would clearly show what is the effect, what is the impact of the transaction, and which account has been debited, which account has been credited. So here laptop has been debited. How do you know? Because the amount 40,000 has been mentioned under the column debit, and cash has been credited. How do you know? Because the amount 40,000 has been mentioned under the column credit, right? So this laptop and cash both are real accounts, right? As I said, something that you can touch and feel. Laptop, you can touch it, you can operate on that. So it's a real account. Cash is also a real account. You can touch and feel. So what's the rule, golden rule for this real account? Debit what comes in and credit what goes out, right? So debit what comes in, so we are going to debit 40,000 for laptop, so laptop has been debited, right? Credit what goes out, 40,000 has been credited for cash, so cash has gone and cash has been credited because both are real accounts. Okay, so if you just know the golden rules, you can easily make this journal. Okay, now let's look into the second example. Kiran has to pay salary of 10,000 to his employee. Okay, note there is no transaction that has happened here. He is yet to pay the salary. However, in accounting, we need to record this if we are preparing a statement to show the current position of a company. Okay, here Kiran has a company and Kiran has not paid the salary yet. But if we are at this point of time, if he has not recorded this particular transaction, okay, there is no transaction that has happened, but if we have not recorded that there is a salary outstanding, we are going to overstate the income, right? We are going to overstate the income if we have not recorded this transaction. So we need to record this transaction as salary is outstanding. Salary is outstanding and it's an expense. Definitely that expense should have happened in that particular month. Say for example, this month he has to make the payment. So it's an expense for this particular month. So we are going to make that we are going to record that with a journal. Okay. So what are the two effects of this journal? Salary is an expense. Okay, Kiran has ideally incurred this salary expense but not paid cash yet. Even though he has not paid the cash, salary is an expense and he should have paid it. So he has already incurred that expense. Please note, in double entry accounting or in accrual accounting, okay, we call it accrual accounting. So salary must be accrued. Salary must be considered as an expense. So salary payable is another account or salary outstanding is another account, and this account would be credited. So it's a liability. So when you credit the amount for any liabilities, the that particular account, the balance in that particular account will increase. Okay, salary is an expense. What is the golden rule for expenses? Expense on it's a nominal account, right? So salary is an expense, and the golden rule for expenses and incomes, losses and gains are debit all expenses and gains, sorry, debit all expenses and losses, credit all incomes and gains. So according to this particular golden rule, we are going to make the journal. Okay, because it is an expense, debit, we are going to debit the amount, okay, to this particular account. So 10,000 has been debited for salary expense account, and a liability, salary payable is a liability. Okay, it's also called as a representative personal account because salary is to be paid to a person who has a name. So it's a representative personal account. Because it is a liability, we are going to credit it. When you credit a liability, the balance will increase. Okay, now what happens with this transaction is there is a salary payable account for which the amount has been increased from 0 to 10,000. So if you look at the balance of this particular salary payable account at the end of the month, it has increased from 0 to 10,000. That means the balance is 10,000 rupees. 10,000 rupees balance means it's a liability. It has to be cleared. So it has to be made to 0 somewhere in the next period or maybe next month. Okay. So next month what happens is this will be debited, salary payable will be debited, and cash will be credited. When you credit the cash is a real account and cash goes out. Okay, cash reduces and salary payable becomes debit in the next transaction. This transaction it is credit, so it offsets. That means it's nets off. It becomes 0. So salary payable becomes 0 in the next transaction. That is in the next week or maybe next month when the salary is actually paid to the employee. At that time, salary payable will become 0 and cash will reduce in the next transaction. However, this month in this period when we are producing the income statement, we are going to show that there is an expense, salary expense of 10,000. So if there is an income of 50,000, salary expense of 10,000 will be reduced from the income, and we are going to show the net income as 40,000, right? So that way we are going to show the correct picture of income, correct picture of our uh, financial statements, right? That is the reason we need to show it. It's a kind of tricky transaction. However, hope you have understood this. And this is outstanding salary. Remember, in that particular month it is outstanding salary. Next month it will be paid. So hope there is no question on this, these two examples. Hope you have enjoyed this video, and if you have liked it, please do like, share and subscribe to this channel. And if you have any questions, please do let me know through your comment section, in the comment section, through your comments. Okay, thanks. We'll catch up with a very interesting video once again on the basics of accounting, but we'll come up with very interesting examples. So do visit our channel. Let's catch up in the next video. Until then, take care. Bye bye.